Okay, hello. Welcome to today's analysis of the NQ. I'm going to stick to the NQ today. We're just going to look at some stuff for the week, mainly. It's a bit late today, so looking at setups necessarily for just UK is kind of futile, but just going to look towards the future, maybe tomorrow. And yeah, for the week, let's see what they've set up, what they've done last week. It's the 8th of September, Monday, another fresh start. Okay, first let's look at what they did on Friday. We had a massive push up and then a massive push down. What does that mean? Let's look at it contextually. First, going to the 30-minute. So it's important to understand where we are and what's happened, not only on the normal charts but on the CME, because there's some stark differences between the regular exchanges and the CME. So I was talking about these lows down here. We have a huge SMT, not once, but two times between these two lows. And this low on the CME actually came into a very important little area, which is attached to the greatest kind of structural break that we have going on, besides huge weekly moves. Like, this is very, very, very large. We wicked into this little area here on the NQ. I was slightly unsure about it. Last week we were taking trades inside of this kind of zone. Well, not this was Friday, but here and here, talking about the implications of this low, and whether it would actually have the power to kind of change structure inside here. We're taking some shorts, taking that into account, or some longs and shorts, taking that into account. Now what's happened is we have pushed past this high at 23,800, and we came into liquidity points on this push down, which is the highest high, the all-time high. We dived heavily into that zone, right? Like, sorry, the 12 hours is a bit messy, but 12 hour, like 6 hour, daily, we all had heavy money flow divergences into that point. And we hit a 1-day order block. The thing is, this, if I'm going to just follow my structural kind of rules, like, I have to be aware that this could be a kind of midterm break of structure, and they kind of showed that by having this massive retracement into this very steep push up. Now I'm going to look at the extremes of where I would consider kind of comfortable demand zones to take some longs, and I'm also going to look at a potential interpretation of this that could be a bit more bearish than it seems. So below us we have, like, if you want to look at it as this being our last proper point of liquidity taken that relates to external structure before our break of structure that relates to large structure, it's these 2 points. So these 2 points really, and what they've left us inside to play with is interesting, because we have these ascending lows here, right above kind of important money flow areas down here. And technically, technically, you know, we can come into here and still maintain this midterm bullish push, of course. Does that mean I'm going to wait until price comes here to long? Not necessarily. So uh, I was calling this a little change of character, and it could create some kind of retracement sources, I guess, from this point. But really, if I wanted to see something that was a convincing change of character, I'd like to see a lot of bearish activity and, you know, liquidity being taken and low closes around this zone, right? Um, we could then maybe see some kind of, drawn out kind of push down into the greater structure. But we could also get a swing fail at this point, which could give some nice longs. I then have my LLBU, which is down here. It is on very, very internal liquidity. But, you know, until this point, I would be kind of comfortable on assuming that this low has interacted with external liquidity and I'm still playing the right pull, right? So down until this point, I would still kind of be comfortable with the narrative of this low being attached to something favorable for higher, right? Now, obviously, like, they can do news and it could come all the way down here and then get a swing fail. Sure, fair enough. You know, that could be something that could happen. But depending on how we interact with these points, you know, like depending on how we are interacting with these zones, I will interpret them a small bit differently. Just mainly because of this push. Like, if this low took this heavily into that demand zone and then did all the rest of this, I would be much more confident on assessing my risk based off of this low. But because of the way they've made structure inside of this push, like, it just feels like they could swipe this whole thing, which is it just makes me a bit uneasy about the strength of this actual push up. So I'm going to talk about the opposite idea that I had, and what if this is some kind of lower high, or something like this. Well, we dipped really heavily into this point, very, very heavily. We could consider this daily block mitigated. We could. Now, I wouldn't be surprised if they took this high once more to then start create really kind of stronger bearish internal structure, at least temporarily. You know, obviously we don't know if that kind of structure could be just a retracement into demand or if it's the overall bearish downtrend taking over, because we are still competing with this guy. In a way, we have a lot of liquidity up here though. So, well, what does that mean? Like, for me to really consider this block having done something that is overtaking this kind of narrative, and this guy and all of these SMTs and these breaks of structure, I would have to see it very convincingly be breaking down, low and low here. Obviously, I wouldn't be shorting the lows, but this zone, I think I'm going to be a bit standoffish on. You know, depending on what I see, I might take longs. But what they've done now is they've tapped an external demand area that's linked to a very big structure and come up to the midterm bearish trend to the very extreme of it, and they've opened that whole zone out to just mess with. You know. Kind of like what they did here, right? But differently. It's like this, but it's much more straight up, right? So yeah, and in the same way that I was cautious of taking trades around this zone at the lows of this point, I will be the same around here, depending on what I see. Yeah. That's just me. So look, for now, if we see some nice bullish signs coming in here, I might take some longs based on the idea that that low is strong. There was a little SMT down here on the ES as well. I was kind of, I was iffy about this point. Then I looked at the other charts. This was taken on ES. Might be a sign that it's a bit stronger than I anticipated. But we'll see. Okay, so immediately let's look at what they could do in the next few days. All right. Well, okay, let's go back to the 30-minute. We've mitigated a 2-hour block here. Why is this not a little tick? Well, because of the nature of this huge push down, I don't have much internal structural points to be super confident that this is a strong push up based off this liquidity. Right now, I have to be aware that this could have been some very aggressive liquidity grab because of the money flow divergences, because of the bearish divs, because of the fact that it came into a one-day block, because of technically we're kind of at the end of my tolerance for this midterm downtrend. You know, the bullish structure is really stacking up. But you have to take into account a lot of things, and this could be some huge liquidity grab for a short side push. So for now, this block being mitigated, it could bring us up, of course, and if it does, then I'll be aware that this block did something. But for now, there's a lot of things below it. So if you see this 2-hour block, inside it we have kind of two areas that it could swipe. It swiped the first one, which is the low of this block, into it. But lower, we actually have kind of vector recovery. We have a 7-minute block down here that is completely untapped. And we have a nice wick that kind of pushed lower and created some displacement in here. A nice little wick here that took this low and then broke structure. It had a little displacement here. It came up, broke internal structure, came down into what seems like external, and then pushed up, and that's the one that took us up. So we could say that taking this low, right, or even the one above it, which wasn't interacted with at all, into this block, could be a nice little zone for a long. The point of control was tapped for this. We're also sitting above a psychological number, right? So 23,500 is right below that low. We do know they like to come for psychological numbers. It also fits within my kind of comfortable risk, my risk tolerance for lows. This was, a nice wash that we had, a nice displacement, and yeah, I could see us play around this little zone here, and I might use that as a long, depending on what I see. What about this high? Well, money flow is setting up for a potential divergence on the lower time frames with money flow and divs, money flow and waves. I could see us taking the high. There's a naked point of control above it as well. I could see us taking the high. The implications of that for higher time frame money flow and waves is that might actually just be a very strong confirmation of the bullish uptrend. So if we did take this high, if you were thinking of taking shorts around this high, I would be super careful, because even though it looks good on lower time frames and it could be a huge retracement, it could bring us down to this block, the implications of it on like the 8-hour and stuff is that our current large waves may not be divving anymore. Now the 8-hour still has space to div. So does the 6-hour, but money flow would be technically increasing from this high. 12-hour would not be. We'd have to see if we print some kind of hidden div. if we just look at the candles as well, you'll notice here we have this massive 12-hour red candle coming into structure, recovering blue vector. And we know that that can be rather bullish given the context, because we have technically broken structure with that push up. So money flow wise, I'm not super confident on just taking this high and then shorting. And if I do, I think it would be relatively small trades. But we'll have to see once we get there. Where is my highest point for this downtrend to take over? Well, you know, this gives me the creeps. This liquidity curve. Our last strong looking liquidity grab was this very, very internal one that you have to zoom, like at this stage now you have to zoom way in to see that this was our last kind of nested wash, right? If we did come up to the high, you know, we're going to be playing with fire, I think, if we came up to this zone, like 24K. Price comes there, you know, I've seen it before. It just could drive you crazy with getting lost in like in all of it. It could drive you kind of crazy. And at that stage, we're that high. A lot of stuff here would be confirmed, I would imagine, if we get up to here. So what does that mean? I think all in all, the bullish case is stronger. There's more reasons for the bullish case to be the real prevailing trend. Let's not forget that on the daily, you know, we have just been coming in, tapping liquidity points very, very cheekily, getting huge reactions off them. So yeah, the bullish case could be better. Does that mean long right now? Absolutely not. But it's really important to have, for me anyway, the way I trade, it's really important to have a full picture as much as you can that is cohesive, that makes sense for both sides, and weigh up like what's obviously happened on lower time frames to back up one of those cases. And for right now, you know, as I said, coming into these zones of demand, we have a huge anchored VWAP down here around 23,465 and 23,500 in between that zone there. Vector recovery down there, you know, mitigation point below us. Might be nice to come into that zone. Might be able to get a long based off it. Maybe. As I said, coming lower and lower, breaking structure, I'd like to see what they do around here, how they absorb, if they do absorb. Yeah, and then breaking lower and lower, depending on how we get here, I'll have to assess what price action we made before it to see if I'm still super confident on these longs. But, you know, there's a chance we also just spend a lot of time in here, man. Like, you know, like up, swing fail it, like down, like just range in here. Like we could do that. When stuff is so close in tolerance like this, you know, for trends, sometimes they just range it and drive some people crazy. But it won't drive me crazy because I like ranges. So what happened immediately? Well, Japan took out Sydney, but we still have exposed Sydney below. It's not the worst low for Sydney. It's not the worst. We have a pre-market low as well here. I mean, they are ascending lows here, and we're nested within this Friday structure. Friday structure has some interesting stuff going on. If we wanted to say that this 2-hour mitigation was confirmed by this micro change of character, we could assume that there could be a pull in here by taking this low. And we have some money flow interactions down here that could lead to something. I don't know if it's going to be that big, but we have valid demand down here, to me. So I'd like to see how we get there. We're trapped between two Asian extremes, and we came into a breaker, which happened before news. So there's a breaker around here. It's an hour breaker or a 45-minute breaker, or, you know, whatever you want to call it, 15-minute breaker. which seemed to create a reaction from Japan's open. We have a lot of vector recovery above us. We still have this naked point of control, but you know, there's such little structural points on this push down that, you know, this is the kind of zone that the greater narratives take over. You know, when you have this huge push down with no displacement internally, it's just one big sheer drop, interacting with two bigger structural points. This zone in here, this whole drop, you know, I would be taking very, very kind of focused internal trades. If we wanted to play devil's advocate, we could say that this liquidity grab here and then this tiny break of structure could be something that could take us up to take the high. Maybe. We are leaving a lot of liquidity along the way and valid demand zones that are currently nested and could be swiped. So as I said, very, very local demand. We have a volume gap down here around this 7-minute bull money flow interest, which I have to explain at some stage, but not today. We could come into this low and maybe get some longs, maybe. Yeah, so for now, look, we've just had this very extended push up for the week. Price seems a bit kind of like hanging for structure in my eyes. I have some areas marked up below. Above me, I don't have as much, which kind of tells me that maybe this is weaker than I'd like to think, but I have to let that get proven to me before I do anything about it. So yeah, for now, the gaping area is this whole zone, or all of these levels that we have down here. We'll just have to see how price interacts once it gets there. I'm not going to do any of the other markets today because I'm a bit out of practice with them. I need to brush up on my information. I don't want to be giving you information that I'm not fully confident on myself. So let's just stick to the NQ for now. Okay, that's it, I believe, for today. Yeah, if you have any questions, let me know. Yeah, let's see what they do for the week. I didn't focus much on UK today because it's a bit late. So when I get on earlier, we'll see if we can do some kind of 1-minute analysis that helps get some entries over the week. All right. Okay. Happy trading, guys. Peace. And we will chat to you tomorrow.